Well, Dr. Ruddy, it's great to see you. Thanks for joining us this morning.
Wonderful to be here, Jeff. Thanks you for having me.
Yeah, it almost feels like deja vu in a way. Okay, doctor, you and your colleagues did a lot of research on defined benefit trends, and I want to start off with a basic question. The defined benefit plan was originally a retirement vehicle for many Americans, but my read is that this plan has uh, slowly gone away over the last 10, 20 years.
That is correct. So after World War II, corporate America um, took its place in taking care of Americans by saying, "Hey, we'll protect your income during retirement." They used a formula. Hey, for every year of service, we'll give you X% of your final salary, and when you're old and gray and no longer working for us, you'll still have a paycheck coming in every month. So that is the defined benefit plan. But as you've noted, employers, especially for-profit employers, have gotten away from that sort of formula and gone to what we call 401k plans, otherwise known as defined contribution plans.
So, what was the impetus? I mean, obviously, or not obvious to the audience, but you have to make a contribution every year on behalf of employees in a pension plan. Is that the only reason that cost? Is that the only reason why employers like the big three automakers, some of the larger private, IBMs, et cetera, went away from the defined benefit pension plan?
That was one of the reasons. Certainly, they had to make smaller contributions every year. So that was certainly a component of it. But in addition to that, like the big three automakers that you mentioned, Jeff, they had to recognize significant liabilities on their balance sheet for the fact that Americans were living longer, which is great news for us as a society, but
Yep.
was bad news for their retirement plans because it meant heavier and heavier funding uh, obligations, is the perfect way to put it. So as Americans were getting older and older, it meant that the GMs, the Fords, that you mentioned, IBMs of the world, were having to pay out more and more to fund those retirements.
And it's my understanding, doctor, at least anecdotally, that the defined benefit pension plan is still the predominant retirement vehicle in other sectors of the economy.
Yes, there's two main types of employee covered by defined benefit plans in 2026: government employees, and probably to generalize a bit too much, those covered by unions. Those are the two primary uh, type of employees that are covered by defined benefit plans today. Just about every single Fortune 500 company has scuttled their defined benefit plan for the entire workforce. Occasionally, you'll hear about, hey, the C-suite or a very small portion of the company is covered by a defined benefit plan, but it's not for the average employee inside a for-profit firm.
So the pendulum effectively has swung for a great majority of Americans in terms of saving for retirement. It's no longer on the company directly. It's not a liability for them. It's now on each of us,
That's
whether
correct.
you're in a 401k, a 403b. If you're in the private or not-for-profit sector, you've got to save on your own on your own behalf and your family's behalf.
That's right. It's not that the risk has been somehow magically um, eliminated. It's just been pushed. The risk of funding retirement has been pushed from the employer to the employee. If they make their contributions for us in a 401k plan or a 403b plan, if you're part of an educational institution and you don't have any funds at retirement, the employer's going to say, hey, we did our job. We did as we promised. That was on you. So you're absolutely correct.
So there has to be a lot of people that probably would have liked. I mean, look, I've been working for 30 some odd years, but I've never been in a defined benefit plan. Call me unlucky, but I think there are people like me that would have preferred to have someone else manage. I'm not an investment expert. I'm an expert in retirement plans in general, but forgetting my own expertise, I don't manage money. I don't know how to manage money. I don't do it on a day-to-day basis. But we're now asking people to do that. They would probably would rather have someone else do it for them.
For sure. This has been a significant issue. What that wasn't central to our research, but if you read some of the financial press over the past several decades, it's we have to make decisions about, hey, what fund should I invest in? My 401k plan or 403b plan has a dozen different alternatives. How should I know what to put it into? So it has been a significant issue educating Americans because we have to answer those questions for ourselves anymore. It's no longer taken care of us by our employers.
So the retirement pillars, I guess, doctor, would be Social Security, and we
For
can get
sure.
into that in a second about how whether that may or not be around by the time your students start to retire, the defined contribution system, and also your personal savings like your house or your bank account or other savings.
That's right. Yeah. So that is the formula that employers and the financial press typically espouse for Americans. Your first pillar would be Social Security, right? A baseline of income, a monthly check from the government to hopefully fund a portion of your retirement, and then your 401k on top of that. Hopefully that gets you, if not 100% the way home, at least 90% of the way there. So, and then, like you said, other resources, whether you have savings separate from that, equity in your 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 mortgage, your house, or your primary residence, something along those lines.
So, doctor, the pendulum's kind of swung the other way. I guess 1978 is the effective date of when 10 beta found this loophole and it kind of blew into this industry. Um, do you ever see an opportunity where maybe there's a middle way where you take the benefits of a defined contribution system and you kind of marry it with some aspects of the pension system? Is there a third way to combine both of those components so that it's a little bit easier on the individual in terms of predictable retirement income, but also easier on the organization who has to have some responsibility?
So hybrid plans, as they're called, do exist, but they are fairly rare. I will tell you for federal employees that started with the federal government, I believe in the 1980s or earlier, they were covered by a system called CSRS, which was built on the theory that, hey, we're going to take care of 100% of our employees and retired employees' retirement. They moved to a system called FERS, Federal Employee Retirement System, that was built on, hey, we're going to make a contribution that's a defined benefit plan, but we're also going to have something called a thrift savings plan, the TSP,
Yeah.
which operates basically like a 401k plan. So it's exactly the formula you mentioned. Social Security for your foundation, defined benefit plan, and a 401k plan, for a lack of a better term, a defined contribution plan. So you have a DB plan, a DC plan on top of Social Security. So it's a kind of mixture of all three.
And do you ever see? I know IBM uh, recently discussed reopening their pension plan. Do you think the pendulum could ever shift back? Because I think we have a lot of people retiring now. It's something called Peak 65, where I think 10,000 people a day are turning 65. I don't know if that's an accurate number, but that's what I seem to be repeating in my head. Do you think there's ever a time where we might be able to move back fully to the pension, similar to what IBM's doing, where they can fund their pension, do it in a meaningful and strategically smarter way or better way?
Yeah, I suppose it's possible. I don't think corporate America and any organization that's has shareholders wants to take the risk that, hey, we'll continue to live longer. Uh, we as Americans are, if you look at the mortality tables, they kind of crested and even started to drop during COVID decline. Um, but if Americans were, say the next generation, like today's current college students, if they were to live 10 years longer than our generation, Jeff, and DB plans were existent or re-existed inside the IBMs, the JP Morgans, the big three automakers, they would then have to fund that. And I
Yeah.
don't think that's a risk their shareholders want to take. But
So
it could happen.
Yeah, I guess anything's possible. I
There's
do want
one-
to kind of wrap up.
Sure.
This was in your research, but I wanted to ask you about Social Security. So that this, as we've been talking about this morning, Social Security is an important pillar, but yet there are some challenges there demographically because it is a pay-go system. Um, is it your assumption? I know you read a lot of the financial press, the popular press. You do as part of your research, as part of your daily behavior habits. I mean, that's an important benefit that people have already paid into. Do you see that being resolved in some way, shape, or form so that the trust fund is funded for longer than 2032 or 2030, depending on who you talk to?
Yeah. So, from my vantage point, Jeff, I always say to people who ask about it, Social Security doesn't have financial problems, it has political problems.
Yeah.
Uh, so it's not an issue of can we fund it, it's what are the changes that would have to be made by Congress in order for it to continue to work as it has over the past several decades. Now, I will tell you, you mentioned that there are projections over the next, say, 8 to 10 years where um, there'll be more cash outflows than there are cash inflows, right? And at that point, um, benefits, the Social Security checks will be haircut or reduced by a certain percentage. And I will tell you candidly, for my own retirement projections, I'm I'm owed X. I'm counting on half X. The haircut percentage has been debated. There's a statutory automatic reduction in benefits for all Americans, and I've even haircut it over that. The numbers I've seen have been in the 35 to 40% neighborhood, but I've just automatically, okay, I have these credits and this is what I'm due. I'm only going to count on half of that for my retirement.
So
Unfortunately, the topic you bring up, Jeff, it's going to disproportionately impact lower income wagers, which, you know, it starts a debate between the right and the left, right? But it's going to hit the lower income people harder than it will the more affluent Americans, because the poor people won't have large 401k plans or savings accounts to rely on as well. So it's unfortunate, but it could become a very painful topic for low income
yeah.
wagers.
So does, you know, given that potential outcome and in terms of how you're calculating your own benefit, I mean, is it the private? Let's talk about the private retirement system for a second. It seems like just because of the way Social Security is funded and it's structured, it's really like money goes in, money goes out. There are not enough people working to support the people that are retired. So is the private retirement system really and whether it's the 401k, a hybrid, some other, is that really the best option because you don't have these political shenanigans that come into play every so many years?
Yeah, it's true. But a lot of lower wage earners aren't covered by a 401k plan. They would have to go into an IRA where they don't have an employer maybe matching their contributions. So um, it sounds great concept, but in practice, say someone in a line of work that doesn't have an employer with a 401k plan, unfortunately, they're going to have to find some other way of funding their retirement.
Do you think, I don't think the US, I guess I'll just close with this question because I could talk to you for hours. I probably should come to Scranton and come to one of your classes, but uh, are there countries that you look at or think about that maybe they're dealing with this? You know, you look at China, you look at Germany, um, some of the other European countries that have pensions. It's not just the US. Are there any solutions out there that we could apply here that would fit into our governance structure? You know, the United States is pretty unique in its political apparatus, right? But anything that you look at and say, hey, that might be of interest, we could apply that here.
Yeah, so you're absolutely correct. This is an issue that's pervasive. It's an intergenerational equity issue. We're leaving a problem for our children and grandchildren to say, hey, good luck with that one, right? Hey, you've got trillions of dollars to figure out where you want to come up with this stuff. But it exists in Europe, It exists in Asia, as you mentioned. Um, it's a tough nut to crack. Funding retirement is incredibly expensive, especially when people are living longer and longer. It's tough to fund.
Yeah.
So it's an explanation as to why Americans are working longer and longer, as are people all around the world. That's one way to come up with the solution. Hey, I can't afford to retire, so I'm going to continue to work and continue to make contributions and basically shrink the duration of my retirement.
But you also, and we don't have time to get into this, but you have to be able to work, right?
For
You have
sure.
to be able to find a job. You have to, and we didn't even talk about artificial intelligence. Doctor, we're going to have to leave it there. Great analysis. And look, we'd love to have you come back, continue the conversation. Thanks so much for joining us, and we wish you a very great rest of the day, sir.
Pleasure being here, Jeff. Thanks for having me.
Well, thanks for watching, and don't forget, we're back again tomorrow morning with another great expert and another great topic. You can tune in right here Monday through Sunday at 7:30 a.m. Eastern Time. And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place, delivered directly to your email box. Check it out at our website.